So good evening and welcome to today's webinar. My name is Sophia, responsible for curating learning events at Spectrum. So we are focused on learning. We practice that culture, aside from offering you a place to work from at our premium shared workspaces. We also carry out, we also have meetings and event places, meeting and events places for you to host all at one place. And we provide you with the connections to expand your business. So in partnership with Fintech Academy, today's panel discussion will be on Singapore, the Fintech Nation, the journey forward, focusing on regulatory technology or Regtech. Before I introduce you to our esteemed panelists, I'd like to you to do this poll. Let me launch it quickly. Right, so the question is, are you joining us while working from home or the office? So let's give it a few seconds before everyone. Great, okay. Cool, okay, so we see that majority of us are working from home. So let me close this. Okay, so Genevieve, you'll touch on that in the discussion later. All right, so without further ado, let me introduce you to today's esteemed panelists. First up, I have Chai Kit, co-founder and CEO of Synopsys Solutions. Synopsys is an award-winning end-to-end Regtech solution provider, top 10 fastest growing company in Singapore 2020 by the Straits Times, and top 50 high growth company in APAC 2020 by the Financial Times. Its headquarters is in Singapore with offices in the UK, US, Abu Dhabi, Vietnam, and Taiwan. Chai Kit himself has more than 20 years of financial and capital markets experience in Asia. So his vast work experience includes in Macquarie Group, ING Bank, and PwC. So next up, I have Kevin Pang, CEO of Regulators Global. He's the chairman of SG Tech Blockchain Committee and also the secretary for Blockchain Association of Singapore, giving advisory on regulatory updates and the development of security token offerings or STO. His vast work experience include in IBM, HP, Tata, amongst others. So who best to moderate today's session is Genevieve Goh, CEO and founder of Smart Solutions. So she's a trained data science practitioner. Her experience includes working in Vietnam and have covered expansion of businesses in emerging markets and high growth markets in Asia. So she will be sharing her insights on Regtech in the robo-advisory space, aside from discussing KYC and AML. So before I hand this over to Genevieve, audience, if you have any questions, please take this opportunity to post them onto the platform here. They'll be addressed along the way at any point during the discussion. So without further ado, Genevieve, over to you, please. Thank you.
Thank you. Welcome, everyone. And a good evening to all audience, whether you are in office or at home. So earlier on the poll, the reason why we asked about whether you're working from office and home is we all know that the dynamics have changed in the last couple of years. Let's talk about last 5 years. MAS have even adopted new regulations regards to KYC by pioneering what we're talking about, national digital identity, where a platform that allows you to do eKYC. So the dynamics have changed so much that the entire process of onboarding, especially if you are engaging from home or your requirements have changed that much. But what has been common is that the issues around regulatory compliance, digital onboarding, transaction monitoring is definitely still there. So today we have Chai Kit and Kevin to discuss more about the entire process of how we can ensure such systems is robust. But let's start off with Chai Kit. In your experience in the entire process of regulatory compliance, the whole process has always been pretty mundane, and with fraud being very prevailing. Recently we have a big case of $1 billion in fraud, which is really not surprising, but in today's world, especially with new regulatory and new digital onboarding, what's your perspective of how that will impact the entire process, and what do you think should be the key metrics in place to ensure that it still doesn't violate the personal usage, especially as a consumer.
Okay, thanks, Genevieve. Thanks, Spectrum and Fintech Academy for having me on. I think, well, the short answer is, I think you're being very kind in your description of it being mundane. I think it's, actually painful to a lot of people in terms of the increased regulatory scrutiny or increased, regulatory burden, if you like. Now, let's just take your example of the $1 billion fraud case aside first, because the reality of life is that as with every market at any point in time, if you look back in history, where there is money, where there is or a bit of a hype, there is always going to be fraud and scam, to begin with, so that you can't get rid of it, right? Because there is monetary value involved, right? And then there's greed, and there's and therefore there's scam. So that's a separate thing altogether. But in terms of the regulatory requirements, it has always been going one way, which is upwards, and because of and fundamentally it's fueled by the fact that things go wrong, and not because people do not know what they are dealing with. Some of them are intentional behavior, some of them are wrong tone from the top, and some of them are just plain disregard of rules. Yeah, so there are different aspects of the wrongdoings over the last several decades around the world that probably requires different sorts of solutions, or I would say attention that needed to be given to different aspects. Some of them is because lack of supervision. Some of them are because it's lack of technology, for example. So bringing in the Regtech angle to this topic, I would say that as you can see, and you've already alluded to, the global economy as well as financial services are getting more and more digitized. As we speak, and there were a couple of announcements that came out, over the last couple of days around regulatory or regulators championed projects, as well as banks champion projects as well around seamless payments and so on and so forth. So I think that would mean that as people get more digitized or seeking services or financial services in a more digital fashion, then it will mean that, as also explained or actually shown in the poll itself, more people are working from home and more people are seeking services over the internet, over the virtual world, and therefore the need for a digital, a more robust digital solutions around eKYC, around compliance processes is actually not good. It's not a good to have. It's actually a must have. Because otherwise, number one, a few things. The traditional service providers or the traditional financial services providers doing the brick and mortar business may not be able to keep up with the demand of customers, right, who have turned digital. And if you haven't really actually got a platform, then that's where you will be, I would say, out of place, from a competition perspective. And with COVID and with the pandemic continue to go across the world, then you're going to have a situation whereby digital onboarding and non-face-to-face onboarding is going to be the norm rather than the exception. So regulatory adjustment have already been made, and therefore the solutions are already out there, to be used. So I think, I would describe it a little bit more later on, along the course of this session. But by and large, remember the key thing here is that there is a massive transformation about the way financial services is being provided to people around the world, not just Singapore, and therefore it requires the best class regulatory technology solution to support it, because otherwise you can't have financial service or fintech charging ahead with no robust regulatory technology that can support this growth. Then it will not be sustainable.
Yeah, I think you mentioned a key point where it's no longer a good to have, it's a must have. And I think you also mentioned about it being the competitive advantage. So in the past, it's a good to have, but now if you are not embracing new tech to allow you to do faster onboarding, it does impact revenue and it puts you in a different position against your other competitors. So, with this point, I wanted to kind of ask Kevin. I mean, you are in a new age payment services system whereby how do you think that would be important in that aspect of onboarding or KYC, especially you are handling money. So earlier Chaikit talked about once you have money involved, right? That's where the competitive advantage is definitely key. So perhaps you can give us a bit of insights in that area.
Sure, I think I'll just probably really fully agree with what Chaikit say, right? It's no longer a good to have, it's a must have, because increasingly our business is pretty global. Right now, we do onboard customers from outside of Singapore as well and all that, right? So without such a system to actually onboard overseas customer, imagine in the old ways, you have to have clients from overseas fly to Singapore to do a KYC and all that. That's not possible, especially right now with the situation where the borders are closed, right? So it's no longer just something that you may try to have. It is something that you must have. If not, you cannot even onboard overseas customers as well. Now, going forward as well is that, increasingly financial crime has increased in its complexity and its innovation in trying to beat the system, right? So even for KYC traditionally where, people just submit their ID and all that, that's fine. And of course, sometimes you won't tell them to take a picture of of them holding the ID. A lot of times it's no longer sufficient because people can Photoshop and all that. So a very good system, right? The likes of what Synopsys can offer, like, because I use the system, I'm quite familiar, so I'm probably going to use it as an example, right? So this kind of best of class system, right, in the world is actually pretty much needed, because end of the day, while you onboard your customer, you do not want to be caught in such a case where there is a loophole or there's a lapse of during your so-called onboarding of client and you fail the compliance checks, right, in terms of like sanctions and things like that. So I think it's very important to actually have the right tool and also the right platform to select the right provider to be able to help you to do the customer onboarding in terms of KYC, and as well as someone who can actually help you to then potentially monitor the transactions, right? So I think last time transactions was pretty much either manual or the monitoring was actually done, using very expensive state-of-the-art system that were used by the banks. Now, with the advance of fintech, you wouldn't have fintech companies able to cough up $25 million to pay a bank grade, a monitoring tool, right? So which is why I think there are other solutions out there that can actually do monitoring pretty well, right? The likes of what the bank can do, yet at a fraction of the cost. So these are the things that's required, because a lot of things you can no longer do it manually. So I think that's, yeah.
Yeah, I think manually is something that is passé. And in fact, the eKYC, or the digital transformation, I think have started in the finance industry, like not in the last 2 years, but at least the last 10 years. So like even for our company, we embrace a lot of new tech, like, AI and machine learning into the entire process of augmenting the mundane work, the manual work that you talk about. So maybe Chaikit in the Regtech side of things, what is the technology that is being heavily leveraged at this moment? And maybe the thought leadership, like where would you think it will lead you in future? Because we want to let the audience have a feel of what will be the future. Yeah.
Well, sure. I think, well, I mean, slightly take a step back, right? I mean, I am a proponent of, you don't put the cart in front of the horse. You need to make sure that the horse is in front of the cart, What that means is that, typically people will throw shiny technologies at the problem and assume that the technology will sort out the problem. Unfortunately, from a regulatory standpoint, I don't think that's how it works, right? So first and foremost, the ability to understand what the regulations seek to address, and the or the malpractice is seeks to stem out, that's something that we need to understand in the first place, right? So before you apply all sorts of technology to the problem, you need to understand what are you trying to solve. That's the first point, that I think we need to all understand. Now, generally, in terms of the types of technologies that at least, with Synopsys we use, or any other people who use, like Genevieve had mentioned, artificial intelligence is a very broad category. It includes, machine learning being one verticals with it, and then it will include, things like natural language processing, optical character recognition, and various other verticals within AI itself. Now, one thing that I would also say is that balancing up cost effectiveness versus how much someone wants to pay, because a lot of the areas around AI and machine learning to some extent is still within the R&D space to some extent. Even if you put a machine learning algorithm to try and detect the next money launderer, you still have to do a heck of expert validation, in order to actually drill down to or tweak your algorithm to cater for a reduced amount of false positive that you may see, over time. So, but some aspects of that is actually are already, I would say, commoditized. In the likes of things like OCR, things like even facial comparison technology, imaging technology, these are all quite commoditized by the big tech firms already. So, a lot of people, if you're trying to reinvent the wheels a little bit there, then, maybe it might be a bit of a waste of time, because, things are already commoditized. It's already not a very exclusive offering to have. Now, cloud is definitely an essential aspect in order to be, Kevin mentioned about the 25 million, price ticket for the old enterprise solutions. A lot of these will probably, deploy on-prem, or, what you call the server deployment type of project that banks will roll out across the world. But in this time and age, adoption using cloud technology is also kind of it can be to some people good to have, but it's borderlining trending towards the must-have category, because if everybody is using it and it's cost effective, and then you're still stuck with a $25 million server deploy, then that might be again put you on the wrong side of the fence. And another thing that I think people like to talk about, and I think maybe we'll defer that to Kevin, would be blockchain, right? Use of blockchain does have its benefits, but it's not going to solve world peace from what I think. And it's definitely at a very nascent stage. How is it going to be applied to KYC? There were suggestions around, because the concepts of blockchain, having it being immutable, right? The principle of it, or the characteristic of it being immutable, it sounds very attractive and very relevant to the likes of digital identity, because we don't want our identity to be manipulated, so to speak. I mean, Kevin talked about spoofing and all that, but we also do not want our identity to be on the public chain, for example. So there's a bit of a conflict, between that and as well as data privacy restrictions around the world. So these are higher order issues that is above our pay grade, I would say, because it's actually at the G to G type of a level, at the national level that that conversation need to have had. And the last thing we want is probably to have different little pockets of people doing various things, and then end up, not being able to interoperate.
Understand. I mean, on the topic on blockchain, Kevin, I guess that is key, because people are leveraging that for a lot of the eKYC experience. Maybe you can share a little bit about that technology and the risk that is, or no risk there is, with that technology on especially in the payment space or the digital wealth side of things?
Sure, definitely. I think blockchain could potentially be a very good use case on the digital identity part of thing, as what Chaki has just mentioned, right? But because also the thing about blockchain is the nature of it is decentralized, which means that your pockets of information, while seems secure, is actually kind of like, in the public, right? And so no government or no one will actually feel safe for that. Then, of course, you have a choice to use the so-called centralized blockchain technology, but that is only being kept by individual governments. Then, of course, then it is like what Chaki said, right? G2G relationship, which government would then agree to then do a kind of a federation between the government blockchains so they can get sharing of information and all that. And that is always timed with government to government politics. So it's not ever an issue, right? Not easy issue to actually solve, because after all, it goes into politics, right? So the whole idea of eKYC, even in the realms of blockchain right now and all that, is still very relevant, because cryptocurrency, right, which is the best use case of blockchain, is now has gone mainstream. It has been viewed as a financial instrument by both regulators and banks as well, right? Which is why banks are actually, allowing their wealth clients to actually invest in the blockchain. Then you got DBS Bank actually setting up a exchange, right, to actually deal in digital assets and all that. Now the thing is that it's still the same, right? You need to identify your customer. So KYC is still very much important, eKYC as well, similarly to what we are doing. So whether you are trying to sell Bitcoin and all that, you need to onboard the customer first, and it still goes back to KYC. You still need to have a very robust KYC system, which is recognized and acknowledged by the regulators, because I think there's a lot of solutions out there. Not everyone kind of like, is approved by the regulators. There are certain loopholes, there are certain deficiencies in such systems. So always look for one that actually, the regulators kind of recognize it, right? So that's one very important, because right now while it's being recognized, it is also regulated, which means that there are certain policies that you need to actually have in place in terms of like, when you actually buy certain tokens or you're selling crypto to a client, they need to do the KYC first. After subsequently that, right, they have to then also monitor the other few things, is understand the source of funds. Traditionally, when you look at fiat currency, source of funds, you can ask them to show proof of bank account or where the money comes from bank account, right? But it's not so straightforward with blockchain, because it's all in a digital wallet and it's all distributed. Now, the question is that how do you discover that, if that source of fund or the source of the cryptocurrency is coming from a non-illegal source, right? So this is where I think some of these, what I call know your transaction solution comes in, that can actually either whitelist the wallets that are actually whitelisted based on the list of wallets that have been whitelisted, or at least have a certain transaction of matching to see which are the funds, the potential coins are actually coming from. So these are also still very important, especially much more so that things are regulated. I mean, back in a couple of years back, 2017, when things like cryptocurrency came into heavy prominence, right? It was a wild west. KYC is not existence, or even if they do, it's just lip service, right? But now fast forward to current times, right? It is regulated in a lot of places, especially in Singapore, and FATF, which is the global regulatory watchdog and organization, has a view on it, and they kind of submit guidelines to various which regulators will probably need to follow, right? So increasingly, it's actually being monitored, and one of the key things that are actually being kind of really emphasized on is KYC, AML, which is then you actually monitor the transactions. So I think this is very relevant even for blockchain.
Yeah, so I think we talk a lot about KYC, and you mentioned about like KYT, which is know your transaction. And I think with this entire digitalization, in future, people will be looking into like KYS also, know your suppliers, or know your vendors that you are putting money into. So, we also talk about how the G2G level, the government's responsibility in ensuring the push forward in such adoption. And, with the latest push in sustainability, we also have G2G establishing suppliers that are doing, let's say, carbon credits, things like that. So these are the more new age stuff, leveraging on blockchain, making sure that the ESG theme is still maintained and things like that. And I guess that would further emphasize the importance of understanding the entire process and eliminating that risk of AML, which is kind of like something that everyone in the financial institution cares about on a day-to-day basis. And we talked about like the rise of such virtual tools. So now there is virtual assets, digital wallets, virtual asset providers. And earlier, Kevin, you talked about source of fund and source of wealth. So how do you think we should be looking at AML on an end-to-end basis to ensure this risk is then reduced, and that this money is not put in the wrong pockets, in other words? Yeah.
Maybe I go first,
Okay,
Genevieve.
sure.
I think, again, this is like the holy grail, right? If everybody knows the answer to that question, then there'll be no work for us, and the regulators can close shop. No, the reality is that it doesn't work as simple as that, because maybe I'll just give you a different perspective here. Now, you keep asking about the process and how do we use the tools or technology to make it better. I know that's the outcome that we want, yeah. But there are some fundamental questions that needs to be answered throughout the whole process itself, right? Nobody onboards a customer for the sake of it, right? Onboarding customer is a mean to an end of providing financial services to that customer so that you can make some money out of it. That's what everyone does. Now, what that means is that for anyone who's looking at providing a service of financial services or whatever kind of services that you do, then it will mean that there are a few questions that you need to answer, or at least be able to answer those questions when you are being asked, right? And this will hopefully make it easier for you to understand how the regulation applies to you. Now, first question, you basically need to know your customer that you're dealing with, or your supplier, or your vendor, or whoever. Who are they, right? Who are you, right? So that's where the eKYC thing comes about. Like, you need to verify. If I say I'm Chaikit, you prove that I'm Chaikit. I have to prove it, right? Either through my info, or whether through a passport, or through an ID, whatever, right? So, all digital or hard copy, that is the question that needs to be answered. Who are you, right? So that needs to be done, and that's already processed underway that is digitizing this requirement. The second question on KYC, who are you not, right? You don't want to deal with people on the sanction list. You don't want to deal with people with, maybe adverse media, or people who are politically exposed person in a high risk country, and so on and so forth, right? So that question, besides my info itself doesn't give you the information about who are the bad guys. It verifies your identity. Yeah, I'm Chaikit, this is my NRIC and my address, and so on and so forth. But it doesn't tell me whether am I a politically exposed person. It doesn't tell me whether do I have a fraud that I have been convicted elsewhere, not in Singapore or wherever, right? So you need to answer this question of who are you not. That means your client. You don't want to deal with the bad guys, or the people on the UN sanction list, or if you deal to a great extent, maybe with the US counterparts or US dollars flowing through your platform, then US OFAC sanction is very relevant to you besides just the United Nations sanction. So that's one part of it. Now, the third question that everyone needs to answer, because KYC is not at a single point in time. It's a process like you described, and it's an ongoing process for as long as you provide that service to that customer, forever and ever, until you close shop or they close shop. So which means that you need to know that the person is still who they say they are over time. So it means that the ongoing due diligence and all that have to continue, based on the risk profile that you have allocated to them, for example. Then the last question, you can't launder money by knowing your profile. You need to launder money by actually doing some transaction. So that's where the, what did you do question comes about, which is, your transaction, whether you trace the tokens, the cryptos, into different wallets, or you trace the, whether when you jump into different hops, whether those wallets get tainted, in ransomwares and all that. There's already solutions doing all that stuff. But more generally, this concept of the what did you do applies to both the fiat world and the virtual world as well, because these are all financial services. So I hope that 4 questions that needs to be answered it gives you a very high level thing to think about, especially for people wanting to get all the AML KYC requirements sorted in one go. You can't, because it's a process, and this changes quite quickly over time, because you can have a client who is onboarded and then is low risk, but over time, and he starts to do a lot of transactions that is a bit suspicious, a little bit fishy, then his risk profile will change. And this is what I would call dynamic risk assessment that needs to occur. And there's this concept of perpetual KYC as well, that the KYC needs to be perpetual, not at a single point in time.
I see. Yeah, interesting part about the dynamic profiling, and that it shouldn't be only having a check when a transaction's in place, but it can happen even before the transaction takes place as well.
Correct.
But all this just sounds, we talked about being mundane, but all these questions just looks like it's going to make the customer journey a little bit different from how this entire digital experience is, because not forgetting, this entire journey of digital transformation all started with e-commerce stores, for example, these digital native companies like Shopee, Lazada, where people are liking it because the experience is different. But applying it into financial services, Kevin, what do you think the expectations in customer journey would have on such processes, and how can we still maintain robustness and not make the end client feels like, forget about it, I just go somewhere else instead? Yeah.
Yep. So I would actually go on the fact of automation, because again, back to just really sharing experience, right, of actually manually doing KYC and onboarding a client. It can take as long as even take almost like 20 minutes or even 30 minutes to onboard a client manually. So just imagine how many can you do per day, right? But if you look into an entire automation process where the KY, and of course that KYC system, the automated system, need to be an API connected to your own current system, then it's fully automated. It is also to make it a very good onboarding experience for a client, rather than, the client submit all the data and say, okay, we'll get back to you. And guess what? It's like a day later, right? I think it has been happening even for some of the providers. That is a very bad experience. Sometimes it actually lapses like 2-3 days later. Like for instance, when I was actually signing up an account with some crypto exchanges, and that was like a few years ago, right? It is a manual process, even though they have a system and they get back to you 3 days later. Now, fast forward to current times, right? Nobody is going to wait 3 days to get an account set up. It's a very bad user experience. People are expecting near real time, or at least 10 minutes reasonable time for them to get an exchange, get onboarded, right? So this is definitely a very important fact to have automation. So whether the platform they're using, right, the supplier that's providing the provider that's actually providing you the technology, are they able to integrate automatically by API to your system seamlessly? Right, that's something to actually take note of as well. Not many systems actually have such available APIs that work perfectly. Secondly, it's also about the security of the API. Now, everybody claims to have API, but the thing is that when you are looking into regulated activities, even non-regulated activities, right, are the API connections to your platform secure from your supplier? A lot of times, APIs are always what we call the backdoors, right, where the APIs are not secure, and hackers use that to actually, that API connections between the supplier and you, use that as a backdoor to get into your system and hack your whole system, right? And it's happened, right? Major system has actually fallen because of that. So again, when look into your solutions and all that, look into that as well. How robust is the API that your providers provide you to connect to their system, right? To ensure things are automated. So there's something to actually look into as well. Now that's, I think overall, I think that's something very, very key to actually look into. So again, back to the same thing, right? Choose your right supplier that can actually follow your journey throughout, and not someone that, that will fail compliance, fail the regulators' recognition, or are dubious in terms of their security infrastructure, because that's something very important itself, right? While you're using the system, the security infrastructure that they provide for you that links to your, and because they are going to be tightly close to you, right? So that actually opens up your system to risk as well, if you choose someone that is not able to provide you guarantee in terms of security on the infrastructure and their services.
Yes. Can I just add on to what Kevin has mentioned, because he mentioned two very relevant points that I thought would be useful to just add a little bit of a context there. Now, first one, First one being the speed. I think there is expectation gaps that people need to breach, from either side, because the reality of the reality and the need to perform KYC and AML will mean that there will be some people that requires a deeper look. There'll be some people who will be simple, clean, and fast track, if you know what I mean, right? Low risk, So just give you an example, right? Our system end to end, to do the digital onboarding as well as to do the screening and risk assessments and all that. If you are clean, no screening hits, finished all your documentation and all that properly, all that entire process can be done within 100 seconds. For the good people, so to speak, and you want good people to be on the system. Now, for those people who may have a hit, whether it's false positive or otherwise, and maybe didn't do the passports or the ID is not recorded nicely or properly, then those people will take a bit longer time. And you want to make sure you accord different level of review to different types of or categories of clients or that is being onboarded. So another way to look at this is that people sometimes say, for example, if you have a 10,000 client, you expect to put 10,000 names through any platform and expect 10,000 clients to be coming out okay. This is not a sausage making machine, that you put meat in one side and then, the same quantity of sausage will come out from the other end. It will mean that there will be some parts of the meat that will get rejected and get stored and needs to be looked at further because some of them may have hits and so on and so forth. So you need to appreciate that and not expect the impossible for the system to do. And you should be very worried if a system that you're using passes all 10,000 names through the system and everything is good. That will be a big problem for you. Now, the second point I'd like to add on is around the part on security. Because KYC involve the processing of what we call personal identifiable information, in short PII, and that would mean that whoever supplier that you use, whether in Singapore or in other countries, depending on where you're located, you will end up needing to do a bit of a digging into the vendor himself or themselves. Because if you're regulated by MAS, there is this thing called the Technology Risk Management Guideline and Outsourcing Guidelines. And these are, there's force of law at the back of this because these are notices. Yeah? So which means that a breach of these may have severe consequences. Now, that would also mean that if you are passing through, whether it's API or otherwise, if you are handing your clients PII information to your vendor, you need to be really, really careful and to some extent paranoid about what they do with their data and where they store it. Are they mixed together with all the rest of their clients and stored in a server, in a random country? I wouldn't want to name any country, but you got to know. And even so, when people say, oh, it's all stored in the cloud, then the question is, which cloud are they using? And even if they tell you that they're using AWS, they're using Google, they're using Azure and so on and so forth, and there's no guarantee because these providers are world-class. They provide you the infrastructure and the premise and all the security feature. But if say for example a Regtech provider uses their solution and they don't do the architecture of their application properly and segregations of servers and so on and so forth, and they don't silo and encrypt those instances for you, which will likely be that all your clients' data is all commingled together with other of their clients' records. And that is where a major risk may occur for you.
Yeah. So I fully agree. I mean, I have been working with large clients and the importance of the software part of things, the application side of things. in terms of new technologies to allow adoption of like, eKYC and AML solution, but often being forgone is the technology side, the infrastructure side, where data is being leaked out, or there are internal hacks and stuff like that. So everything has to be seen on an end-to-end basis to ensure that that perspective is foolproof, so that risk is kind of mitigated. And on that part, right, with robo-advisory platforms being more and more popular, and I mean, after you onboard a client, after you know whether the transaction is suspicious or not, the next part is then, if you do cross-border trades across such robo-advisory platform, this process is even more important, because you are now trading across your own country's jurisdiction. So the laws and policies might need to be adapted to suit to that. So Kevin, perhaps a question for you is, on the blockchain side of things, how would you apply that to any policy changes when it's into the robo-advisory space? Any insights on that?
Okay, so in terms, even with the robo-advisory particular, I mean, there are certain robo-advisory right now, even for blockchain in terms of investment and all that, right? I mean, that's already happening as we are speaking. So there are certain trading bots that are arguably almost like operating like a robo-advisory in terms of like what exactly, which crypto to actually invest and buy in, right? So of course, those are some of the things that people use to actually help the trade, and because this is unregulated space, right? Robo-advisory for blockchain, I mean, robo-advisory for traditional wealth management, you can say arguably that the regulators look into it. But for trading platforms that, and which is why this comes into problem, the whole top thing that was on the news where it collapsed and people were making police report, right? They are actually a trading platform that uses a form of robo-advisory of their own, right? The problem is that it is not regulated. You're not very sure exactly what goes behind that particular robo-advisory, right? In terms of whether any, is it a fully audited system? Do they actually look into who runs that particular robo-advisory, where the source of information comes from and all that? All these are in question, which is why, some of these trading platforms collapses, because they're operating in an unregulated space. They do not answer to anyone. So I think in the space of blockchain, for the purpose of doing investments and all that kind of purpose, right? Then I think eventually it will come to a point where this need to be regulated properly to understand even the source of data, the actual robo-advisory itself, right? Who do they actually represent? I mean, where they get the information from? Based on what principle are they kind of like helping to introduce certain investments or trades to investors and traders. So I think these are some of the things that will have to be looked into and potentially even regulated, at least, right? And that's to also prevent the collapse of the similar cases of like top again, right?
Yeah, I think I am also in the area of robo-advisory, and one of the things that we always advocate as a platform is the transparency. So as much as we want to have machine help with some non-biased recommendation, we also want to know what constitute that recommendation. What was the data being passed through for the machine to understand, like what has been evaluated, and like what Chai-Kit said earlier, right? It won't be a world of machines making decision. There's always a human behind to ensure that there's false positives, there's being check and balance and things like that. So what we want to kind of gear towards is really assistance, in ensuring those mundane processes is being assisted. And at the end of the day, we want to have a risk-free decision making, especially in the financial space. So we have discussed a lot, I mean, in terms of eKYC, KYC, AML, and many of those new technologies out there. So at this moment, I just wanted to see if there is any questions from the audience. If no, then maybe Chai-Kit, we can perhaps talk a little bit more in terms of the entire robo-advisory experience on your side? Like, have you been helping to maybe audit or look into making such platforms robust in your course of work?
No, not in the audit sense, but we do. I mean, Synopsis, we do have clients who are robo advisors themselves. You know, whether is it from a B2B or a B2C type of a robo advisor platforms that we've worked with since the early days of fintech. You know, in Singapore, like 2015, 2014, 15 time. So I think at the end of the day, robo-advisor to me, I mean, as it is regulated in Singapore, I mean, Kevin talked about some of those that are not regulated. So leaving those that are unregulated in other countries aside, the ones that are regulated and want to do it properly, it will generally be falling under two sorts of licenses, right? In Singapore, at least the fund management license, you know, CMS fund management license, as well as perhaps to some extent maybe the financial advisors, exempt financial advisors as well, because you're giving advice at the same time as you're managing the funds. So, but at the end of the day, whether is it robo or whether is it, you know, like we talked about AI earlier on, you cannot send the machine or the algorithm to jail if something goes wrong. You know, you cannot send the software developer to the jail, you know, for you know, if it's not his own, you know, malfeasance himself, yeah. But what you need to be, what we all need to remember is that at the end of the day, the robo advisors, the people running the platform, or the people responsible for it, or the people promoting it, obviously will need to be held to task if, you know, be it there being fraud, be it, you know, not working as intended to. And at the end of the day, it boils back down to the human controlling it. You know, the human controlling it, or the people mis-selling it, for example, or abusing it. But if one way to also look at this is on expectation of the end user, right? If the end user got and there's a lot of I would say marketing fluff, you know, that's out there that it may and that gets into the point that you mentioned about frauds and scams. Yeah, there's a lot of fraud at the moment that talks about, you know, making, you know, double-digit returns, triple-digit returns, you know, with cryptocurrency and so on and so forth. So where there is greed and people fall for it, and therefore, you know, the reliance or the expectation that there is a risk-free ecosystem, I think will be a little bit unrealistic, because you are in it because you want to take a risk, you know, to make a return. And nobody is in a risk-free environment, because if it's risk-free, nobody's going to do anything, and because there's no money to be made.
Yeah, true. So before we delve more into risk-free, we want to thank Kevin for joining us for this panel. And we look forward to having Kevin again in our next discussion. So with Shaikit and I, we have maybe another 5. Yeah, thank you. Another 5 to 6 minutes to talk about.
There is a question. There is a question, Genevieve.
There's a question. All right. Let me see. Okay, so the question is, how can you actually confirm source of funds in cryptocurrency trade? It sounds like a very tough task. So Shaikit, maybe you can share a little bit about your experience in that.
It is a very tough task, and to some extent, it can actually be a very futile exercise, meaning that you get nowhere, because the definition of source of funds is, you know, where does this fund comes from to facilitate this transaction. You know, that's the general sense, either in a fiat world or in a crypto world. But in the crypto world, because, and so go back to the fiat world first. In a fiat world, you can ask typically the question gets asked, source of fund, oh, I'm a salaried person, and therefore my source of funds, you know, comes from salaries, right? For example, and, you know, this is my saving, and it comes from this bank, come from that bank. That's kind of easy. But crypto makes it a lot harder, because the way cryptocurrency is hosted into either in exchange or into unhosted wallets, for example, private wallet, that makes it very hard for people to be able to say with certainty this source is from that person or from the other person, because none of these tracing of wallets or even the coins itself in the public domain points to, say, Chikit or Genevieve. Our names are not out there, but it's just a strings of alphanumeric codes that says this is the wallet address. And it means nothing to anybody, even to programmers. It doesn't mean anything because you cannot go back and say this belongs to Genevieve. So it relies on a fair bit of I suppose declaration, that's one thing, and also relies on a fair amount of the fact that you are because the coin, say for example, is it Ether or Bitcoin, because you can actually trace it in the public chain itself, and you may, if this particular coin, this one Bitcoin has been passed through, let's say for example, a wallet that has been tagged with a ransomware history, or like a Tumblr or a Mixer address, then typically when they trace source of funds, they will say, okay, no, I don't want to touch this because this is already tainted. But we must not think of money launderers or bad guys as being stupid, because they're actually a lot smarter than we think, which means that if we are tracing, say for example, okay, and the rule doesn't really specify, and for good reasons they don't specify the number of hops that you need to jump to trace, how far back do you trace, because if I say you need to trace 5 levels up, then they just go 6 levels up. Then you will never be able to catch them. And that's probably the $1 million question. It's a tough question, but there are ways that is happening right now to at least reduce the risk by making an attempt to try to not hit a bad wallet. Do you know how to get around it? Which is basically every time you try to do something bad, you just create a new wallet that is completely fresh.
I see. Yeah, so I guess that there is some telltale signs in some ways here and there. I think based on experience as well, if any supplier or provider guarantee you a crazy amount of profits, then that is the one red flag. And secondly, if there is too quick an adoption of certain platforms, that is then another red flag, because the traditional way of financial services is always, robustness, ensuring things are not too quickly adopted, because that's the nature of how people will put their dollar in on a general basis. And you talk about traceability. So in my perspective too, it's like how we do network security. Okay, if you want it to be very secure, you have to compensate by having some functions restricted. But if you want to have everything available, then you have to then compromise on the security side. So similarly for KYC or AML on the crypto side, if you want to adopt such quick growth or profits, then it will definitely be high risk. And high risk means you have your own you have to then put in your own judgment of what is right and what is wrong, right? So we hope we address the question from the attendee right here. Any other questions before I pass it back to our host at Spectrum to close off the session? So if not, maybe Chikit, any last 3 things you want people to take away on the entire new new journey forward on Regtech that they should think about as they head on home? Or
I think regulation is here to stay, which means that Regtech is here to stay. For people who are in the fintech space, offering financial services one way or another, or even in the traditional space, the use of Regtech is no longer good to have; it's a must-have, and this is already echoed across the world, in various regulators reports as well. So that's number one, and number two, where talking about specific Regtech solutions, whether it's AML, KYC or otherwise, the world of regulation is very complex, right? Which makes it kind of near impossible to solve everything with one solution. So it will be a continuous, I would say, iterative process that needs to occur over time. And it's a bit of a catch up as well, because regulation always falls behind innovation. And therefore regulatory technology will in some way or other evolve once the regulation is clear. You can't evolve a Regtech solution before the regulation appears, so that's not going to work. But it will be there and it will be useful. If people are not using it, you basically will lose competitive advantage. And more importantly, I call that, using it actually gains a regulatory advantage, and not just a competitive advantage.
Yeah, got it. And then before I pass it back to Sophia, in my perspective, I think the embrace of new technology should still be there. The audience and infant people should not shy away from using robo-advisory platform or new age platform. And I think we are privileged that in Singapore we are we have resources to help ensure that our we are taken care of, with regulations and things like that. So we just have to go in with eyes open and make sure that we understand what are the risks required to look into whenever we adopt platforms like this. So with that, back to the host to kind of wrap up, and thank you, Chakit, for the engaging session, and the audience for contributing questions and listening to our panel discussion.
Right, thank you, panelists. Thank you, Chakit, Genevieve, and also Kevin. So for your time to share valuable insights for us. So I hope the audience, like me, you have learned a lot in just this hour. So I'd also like to thank Fintech Academy for co-organizing this series. So look forward to the next series in the next quarter. I'd like to thank the audience as well for joining us this evening. So if you'd like to reach out to the speakers or the panelists, you may go through Spectrum, or they are also available on LinkedIn. So I'd like to spend some time to fill up a quick survey once you exit from this webinar, and look out for the next series and also our future webinars. So if you have any further questions, feel free to send it to us. So without further ado, take care and stay well, everybody. Thank you so much. Bye-bye.
Thank you. Bye.
Bye-bye.